Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. This is the midweek edition. We are recording on Wednesday, November 6th at about 1:30 Eastern Time. This is the between show, right? Between the
Yep.
election and between the FOMC. So we're going to do a speed round, cover the major market, try and give you an idea of the levels and what's likely to happen. For those of you who are new to the show, my name's Ben Maldonado, and as always, I'm with my partner Barry Hederachi here. How we doing, Barry? You survived the long night?
Survived it, thrived around it.
That's right.
Doing good, doing good. It's good.
Well, as you know, we don't have a lot of time. We only do 30 minutes here on the midweek show, so let's dive right in. That's got the S&P up there, or that's the futures, right?
Yep, the futures. Let's start here. And you're going to cover the NASDAQ, so that's covered, and maybe even take a look at Bitcoin, which you called out accurately last week, from what I
Yep,
remember.
yep. We'll jump on both of those.
All right. So futures, we talked about this 57.29 number being really important, and why. We talked about why in the last couple of episodes. Obviously, there's structural support here. And we were also expecting some kind of a counter trend off of this to see if we get a lower high, because this high we already had in place, came in with so many cycles and so forth and so on, expiring right in that area. And of course, so what happens? We blast out of there in 2 days straight, right up into the election and past the election, and we get above 58.92. So these are the two key numbers we were talking about. Actually, those are the only two key numbers on the board. And you can see we went from, just in 2 days, we went from one end to the other end. And now we're above 58.92. Couple of things to remember here. One, and I was talking to Ben about this earlier, we had a lot of cycles expire here, a lot of important numbers. So my take here is, up until we take out, let's say today's high, whatever, we're before the close. So wherever we close and wherever the high comes in, up until that high is taken out, we have to sort of treat this high, today's high, as a false break, potential false break.
Mm-hmm.
And the way we would confirm that would be, once we get stuck below 58.92, which shouldn't take too much, but we're really, well above that. Right, Ben? I mean,
Yeah, absolutely.
so the two things we're going to watch is the potential for a false break. And how are we going to treat that? Well, we're going to treat it as if that's a false break, meaning we're going to look at the short side, especially if the short-term stuff is pointing that way, in that direction. And basis the daily, we would want to see price get below 58.92. And that would confirm that to be technically we would want to wait till the low of the high bar is taken out. So that means today's low is taken out, but the bar being so huge, it might be easier just to look at the 58.92, not for any other reason, but that was the 90 degrees up from the low. So I think that all sort of lines up. And so that's the logic of how to operate from here. Now, if we can hold above 58.92, any corrections are holding, a point or two around that level, then we have more to go, clearly. And we'll have to treat it that way, which means there are some other cycles that are pending, right?
That's
Not to
exactly
mention
right.
like the 90 that's over here coming up in early December.
Mm-hmm.
And there are other ones that could show up. So 58.92 is the operating number. And far as the pattern goes, we're looking at this as a false break, which happened right around, getting above this 59.28. 59.27 and a quarter. So let's say
Mm-hmm.
59.27 and a quarter. Above that, we have to treat it like a false break up until we can be a little bit more certain. Let's just say
Mm-hmm.
that. Anything you want to add to this, Ben?
No, that 90 is the key level.
Yeah, we
We
want to
get if
watch
we get
that.
below it, it is, that's a potential for a really fast move because think of all the people they'll have gotten off sides with that false break.
Oh, absolutely. It will be insane. So that's one. And we're going to look at the weekly chart just for reference. And I want to show you guys a couple of things. But in the meantime, let's take a quick look at, so cash, what's really interesting is we gap right through the 90. And now
Mhm.
we're, like you said, it looks like a little island sitting up there.
Yeah.
So here, we talked about support last time, I think 56.73, this area we talked about that being the old high, July high, and how that area of support, we held well above it. We were looking to see if we would get a lower high, and what we got was a gap right through it, through everything above 90. So 58.48 is the key level to watch on the cash, just like we had a number for the futures. And if we can manage above this, which means, we probably have a little bit more to go,
Yep.
or we might consolidate here for a bit and get established up above, because we really haven't, first time, we haven't been really established up here in this way. So all-time highs, and we'll treat it that way. Yeah, we had a 90, and all this is happening right around a 90 also. So it needs a little bit of breathing room. But whatever the take is, watch today's low. Like if today's low gets taken out at any time, definitely the yellow flags have to be out. And if we take out 58.48, not forever, I'm talking about next couple of days, right? Let's stay going into Friday. We want to really watch 58.48 and also today's low. Today's low would probably, obviously, would have to come first. We'll take a look at that and these numbers to see if we can hold above or not. And getting below 58.48 would be a sign of weakness. So we have to treat it that way. And if that happens in the next couple of days, then obviously this is going to stick out like a sore thumb pointing towards a false break. Does that logic make sense?
Makes perfect sense.
Okay. So, okay, we'll leave it at that. I don't want to read too much into this.
Right.
And just the Dow chart for reference to see, what's going on here. Now, you guys know we had this little buffer zone drawn up, and I had this target of 44,300. It's been on the board for a while. And that's why I colored up this area, this shady area, that this is a good area for a high. And, the other thing to point to is, after we attempted the first high, we really couldn't hold above that level. And we have to account for that.
Sure.
The market was really strong. We'd hold above that 216-degree level, but we didn't. We kind of dropped below. And of course, with the whole rush here, we ran up again, and that looks a little bit like 3 drives to a high also. So I'm not calling it that. It's not super, super clean, but hey, that's what I'm seeing.
Yeah, the pattern's there.
That pattern's there, and this pattern's here, which means it's fourth wave-ish kind of a move. I know there was a contract change here, but still, this could be 1, 2, 3, and getting into a 4. So this, we could end up getting a little sloppy. Just a quick heads up on the Dow. All right, let's go to I really wanted to take a look at the weekly. Yeah. So here's the weekly, and when unexpected, sort of larger than normal average moves happen, it's always good to go back to where things got started and start heading, looking at things. So here we're looking at the 2009 low, and from there you can see we've done pretty well as far as moving, as far as all the levels go. But now I have this 59.81 marked up, and that's about 330 degrees up. 360 is right there, which is right below 6,500. I mean, I know I mentioned it before, it'd be epic if we can go up and tap 360 degrees up from 2009 lows.
Right.
And, that would be something to see. But we'll wait for that. But before that, we have this 59.81 area, which is very close to 6,000. And that's right about 330 degrees up. And that's an important level. Yeah, it's only 30 degrees off of the 360, but it's also a key level to watch on the charts and squares. So we're going to watch that. The other thing is how we managed to hold above this 50% of the square pretty well, pretty clean. And because of that, we're going to sort of treat this cautiously and not be all either bullied up or all bared up for no reason.
Right.
Yeah. So that's that. The other thing I wanted to cover was a 30-minute, because I know we always cover that really quick. So here's the 30. Last couple of episodes, or 3 or so, we've talked about this 57.20 being solid support. We talked about how if price holds about 57.40, it's going to firm up. And as we take out the levels coming out of this 5720 area, the market's going to pick up momentum, and which it did rightfully. And 5767, I mean, we took out without even batting an eye, stalled at 5814 for a little bit, pulled back, got on top. Here's a recheck. This is what we call holding above. Good example, right, Ben?
Very good
There.
example.
And then ran up right into this 5886, which we've used before, like over here. And eventually 5902, and ran up to the next level we had on the board, which is really, the only number I had between 59 and 6,000 was this 5948. And basically we stalled out there. Of course, this morning we came back and checked the 50% of the square.
Yep.
And, started to move higher again. So this area looks like, this is good resistance. That's why the level's in there. It's also a quarter of the square of the current squares we're running. So my guess is if we hold here with FOMC coming up tomorrow, we could definitely spike up into 5992 area, maybe even tap 6,000, who knows. But 5948 is the key operating level we have to work with now. And I would say if we even get a little bit above it and starts holding above it, then I would say we got one more pulse up into the 5992 area to go and test it, or at least poke at it. And I just can't see it. We have lower highs here. I just can't see it going down without doing a false break, if that's the direction.
Right.
So that's also in the cards. So the flip side of that is really to see if price somehow get stuck below 59.48. Like it did here. This is what I call getting stuck below. We went up there, couldn't do it. It sold off, came back with some momentum. Now we're starting to do it. We have one bar above it. So let's see how that plays out. But I'm guessing we're going to have a lot of volatility. So we need some good frames to work with. And 59.98, 59.48, and 59.92 are a couple of good frames. For the downside, we talked about the false breaks and so forth and so on. I would say the early indication is 5902 gets taken out somehow. We get stuck in this range. So for the bigger picture, the daily stuff we talked about, you can use 5902 as sort of a balance point. And for the shorter term, this 5948 is the level we're watching. How's that, Ben?
I think that's a good summary with all the important levels to watch for the rest of the week for sure.
All right, good. Then I have one more chart, which is this. And we've been covering this, fairly regularly last few weeks.
Yeah.
Only because we're, getting very close to it. Heck, we're on it. So
we're on it.
Last couple of times we talked about how often, we could break out and come back for like a sort of a, when we make a trend line and the price would come back to like kiss from below. And that's a possibility. And you guys know I've had this 59.50 drawn up on, and this is the weekly cash, okay? 59.50 drawn up here, and we're awfully close today. And that would be the ideal spot. And if we were to give it some extra running room, it can get up into this zone up here around 6,100. Okay. And well, let me give you the entire range, 6,100 to 6,150. So that's the upper boundary of it. And we have a geometrical line crossing through right around 60.50. So about every 50 points, there's something on the weekly, starting at 59.50. So what's the deal here? Well, what the deal is, if you put it all together, we have a potential false break. So we're watching the levels there to see if it clicks over or not. We have this amazing run up starting from the 22 low. That just, you could actually say a parabolic,
Yeah.
And well, we know how parabolics end. So we really have to keep an eye on this to see how we exit and we handle it from there on. So for now, we're watching to see how we behave in the next 2 days. Weekly is a little bit too much to worry about for the next 2 days. But so you guys have all the other levels. And
you also have the 108 timing on that.
Yes, well, exactly. And we talked, yeah.
We talked about that. Yep.
Yeah, we've covered it a few times. We have 108 by 144 is really the number here. And 108 has, the 72 vibration has put in highs in the S&P before and a lot of other markets. So that's why we're watching, and that's why, we put the time in to talk about this, I think practically every week for the last month or so,
For sure.
building up into this. So yeah, so let's see what happens there. All right, let's move. I just want to touch on bonds really quick, right, Ben?
Yep.
I mean,
They've been getting smoked today.
and we've been smoking them.
That's a
So
great example of getting stuck under too.
absolutely, absolutely, and a good example of how squares work. I mean, timing
Hmm.
works. If you guys are regular viewers, we called out these cycles that were coming in at the high, and once they came in, we were looking to see if these key levels were getting taken out, and if they were getting taken out, we were looking for the weakness. And well, we got everything, break of the trend line, taking out 124, the counter trends we talked about on the other shows. And I talked about how these 1 day, 2 day counter trends are pointing to a really weak market.
Yep.
And if we got below 119 and a half and the 45-degree line here, things are going to get really slippery. And that if we do that, that we're probably going to go up and, test this level around 112 and a half. Right, Ben? That was the talk.
And it's
So
coming to pass.
slowly. I mean, we broke this trend line. You see that, right? I mean,
Yep.
not like your 40-year trend line, but
No, but it's still significant.
yes, it really took out the trend line, and you can see after that it was really tapping against that, pushing against that, and then and this is not a easy. You can see this is not a grip they wanted to let go easily. You can see a lot of fighting here, and slowly we're rolling over. And so what do we have to watch? I mean, I think the basics are just on the chart. So 118 and a half is the level to watch. See if we can get above. Obviously, the 119 and a half is there also. So that entire area is now resistance. And we're looking, I mean, I would say, hey, stay with the trend, right?
Yeah.
And we talked about how it was 45 down to here, somewhere in here. Here, let's talk about bonds just for a second then. I think we looked at this last week, how 45 would be, that would complete the entire leg. So we want to see here if the 45 holds somehow, or if we slip below. So that's why today's low, yesterday's low is really important. If we take these out, then we go another half, which would clearly take out the April low. So no question about that. But I'll leave the 45 on here just for reference, so we have a good level to watch. All right.
Excellent.
That's bonds and weeklies. We'll check on those on Friday, on the Friday show. Today we'll just hit on some key points because we want to get to cover a lot of things.
Mhm.
Crude, not much to report other than we've been bullish, and we talked about how even though through all of this it was making higher lows, and fair enough, now we're closer to 73.50 than we were, well, 2 days ago.
Yes, sir.
And that's still the level, guys. We have to, I mean, we mentioned this earlier, between these two levels, it's probably going to consolidate. But if we take out 73.50, like we tried to do here, it would set us up for higher prices. So we'll have to watch that and monitor crude as we roll.
Mhm.
Now, gold, sure enough, we started moving lower. We got below the 216 level, which we talked about, I think, last time,
Mhm.
pointing to some weakness. But I wanted the story of gold is really in the weekly chart. So give me 1 second.
And we've been warning on gold about, hey, be careful up here. A lot of cycles came in.
Absolutely. I mean, not only that, look at that hit.
Yeah, yeah. That was
And I
perfect.
think last week or the week before, I said, we're putting gold on pause. We want to see how we correct and reset the cycle. So
Hmm.
for now, we're up. We got the targets. All this stuff we covered on the weekly shows on a Friday show, so you guys can catch that. For now, just to say, we took out the low of the high, so gold is definitely on the correcting. It's correcting. Okay.
Yes.
And we're still bullish, and I think that side is okay, but markets also need to correct, and especially when they correct at key levels, we want to give it the time that's necessary. Well, now that we're talking about gold, just to pop into copper really quick, copper came down to a really critical level. It's 144 degrees up from the 2020 lows. It's at 423. So watch that. Even if it gets down to the trend line, I think we're okay as far as the basic overall balance. but getting below this will definitely give it a different tone than being
Hmm.
able to hold above 144. And we also did a half a square move basis a weekly chart, so which is good. We could end up this leg here, but we want to see, especially watch the daily to see if we get stuck below that level. So that's 423. That's all for the weekly. Let me get back to the daily charts. The dollar we want to
The
look at.
dollar, yeah, I wanted to look at the dollar. Well, they like the dollar today,
They like the dollar, and we love the dollar. So,
right?
and well, this is, if you watch a regular viewer, we've been bullish the dollar. Ever since these lows came in, we broke through. Broke out this little triangle type of a pattern here. Got above the 50%. Then we got on top of the 2/3 of the square, and I said, any corrections holding above the 50% is bullish, which is sort of Gann, by the book. And now it looks like, and we talked about if we clear this, we probably go up and check these highs. So I think we have to stick by that. And so 106 and a half, where we kind of pointed. Let's see if we can do that. And if you can
Hmm.
do that in 30 days, that'll be epic, you know,
Oh, what a nice square
right?
that would be. Yeah.
So let's see how, because 30s work out really well
Hmm.
in the dollar. So anyway, that's it for the dollar. Oh, the weekly dollar has some really, and again, we cover all of these on the Friday show, but it's after this, prices held at 90 that we were all bullied up, and then we're up. And we cleared, I know we talked about if we cleared this 1/3 line, which is pretty much midpoint of the triangle, that we were going to go higher and check the upper trend line. So it looks like we're in line to do that.
Hmm.
Uh,
Pushing.
yeah, and we were looking for some kind of a little bit of a correction before we went, and we kind of got that. It's hard to say when it's all the one bar.
Hmm.
But that's the one thing that we saw on the daily. And just to save time, here's the euro weekly. We talked about the 108, and we saw how we couldn't get to the 90, showed a little weakness, slipped below 109. And we've been talking about this 108 level forever, how that's sort of the mean reversion level. And now we're below that. So any kind of rallies that stall below 108 is fair game.
Hmm.
All right. I think that's,
That's it.
yeah, I think that's all I have. Let me
Good speed round coverage.
Yeah, thanks. I'm trying to catch my breath. So, oh, the only other thing is a Hang Seng, which is doing amazingly. If you guys really watch this, every week, we had this 380, 20,380 number forever. And isn't it amazing how we're holding above that, right?
Just holding right there.
And although, we kind of broke out of this triangle, we came right back in. So we really need to hold above that from here on and continue that direction if it's all going to work out. There is a little trend line right there. So let's see if we can hold that. That's about it. Let's take a look at the NASDAQ and
And
Bitcoin.
Bitcoin. Yeah.
Yeah. So let me put it back to you. And well, there's a NASDAQ. Man, no new highs. That's the thing. No false breaks yet.
That's what stays out and stands out to me is right. The July high is still in place. And remember, this thing led on the way up. I mean, look at this move up. And we just have not, even today, have not been able to make a new high. Now it looks like we're set up to do a little false break here. So we'll have to see how it goes. You can see the key level is this 20,838, right? We got to get on top, stay on top of that to build to be able to keep pushing.
Mhm.
Today's bar is poking up, right at the full square, the 208, right, which is four squares of 52. So we're poking right there now. So let's see how it goes. But you rarely see a chart that's set up like this for a really doozy of a false break.
I'll tell you though, it's since the NASDAQ kind of led the whole thing, but
Hmm.
topped out in July, like we saw last, what was it, midweek drop? Or when did we do the monthlies? Last Friday, right?
Yeah, last Friday we did those. Yep.
And how we saw like how, and also looking at the tech stocks, we saw how the July high was such a prominent high. And
Yeah.
I'm wondering if NASDAQ's going to continue to show us the next chapter.
Well, it led on the way up, and now it's diverging with the other indices that have made highs. And is it going to
Mhm.
lead us down? We'll see.
Exactly.
It's a working theory, but we'll see. We have to see the the price action. On the downside, clearly now this 20,000 is the key level, right? Because if we come back down, we should, be able to break this one by one and that level and then get stuck under, and there would be the fast move comes after that.
Yeah, yeah.
But if we don't make this high, or if we make the false break, we'll get some sort of really nice fast reaction off of that.
Hmm.
So we're watching that and staying in tune with that. And
And of
let's
course, if we settle above that 838, then it changes the entire paradigm, so to speak. And
then we're
we'll have to,
yeah, it's going again, right? We got
yeah.
to be ready to go up, and test this half square. Then would be the next logical spot,
Hmm.
which is 21,675. That's where we would be going. But first, we got to get above, stay above.
Yeah,
Um,
and this pattern for a false break is too tempting, so we got to watch
oh,
that. See what
so
happens there.
so tempting. Yep. We'll see.
Yeah.
Let's see how it goes. The other thing I said this morning on X is that because someone said, "Oh, it's," I said, "We've yet to make a new high," and someone said, "Oh, it's about to," and I said, "Maybe." I said, "But it's not going to set up for a fantastic bull run when the former leader turned into the laggard, right, and is lagging all the other indices, and this catch-up move that would be the perfect setup for the false break, actually."
Mm,
Because if it was still the bull market leader and leading us on a new bull run, it would have led the other indices to new highs.
right, right.
And right now we're just lagging. But we'll see.
Hmm.
We'll know. We got the levels. We know where it has to go to do its thing. All right, let's take a look at Bitcoin. Speaking of new highs, new all-time highs.
Hmm.
And so what are we watching here on Bitcoin? Well, last week we were watching this 67 850. We held it, reversed, and here we are. And now we're pushing above. So what do we want to see? We want to see us staying on top of this level, right? Any pullbacks we want to stay on top of here, just simple structure. You can see that would sit us on top of the previous all-time highs, which would be bullish, and we could keep running. But the chart, ever since we started making these higher lows, we talked about it. Yeah, we're in congestion, but pay attention because we made this spike low, higher low, another higher low, and here we go. Now we took out the highs. And this is like 7, 8 months worth of consolidation. So there should be a lot of fuel here in Bitcoin. The next level up is our half square, and that's just under 80,000, 79,400. So as long as we stay above this full square here, which is the 225, your next target's just under 80,000. But Bitcoin looks good.
Hmm.
What would not look good is if we fell back,
Like a false break.
yeah, false break, just like we were talking about the Nasdaq could do false break here, pull back and cannot, and then get stuck under this 73,666. That would be not good. Then that would mean this is all just a misdirection. But for now, it looks solid. Anything you see that fly in the ointment here for Bitcoin?
Well, just the potential false break. And other than that, as soon as we settle above the 73,666 to be set up for 80,000 or your half square, wherever. Yeah, right there.
Yeah, just under 80,000. Yep. So that's it. As you guys know, on the midweek show, we just try and hit the highlights based on what's happening. And if people are wondering why I didn't cover the commodities, we're going to do a full commodity cover in 2 days. Silver's going to be on, of course. We'll talk about the grains, some positive developments there. The softs are still kind of correcting with the strong dollar. The whole commodity complex is a little on edge, but we'll review that on the Friday show. Anything else you want to highlight that we're going to cover on Friday, Barry?
Well, it's going to look like we'll be covering everything. I think the dollar we have to really watch here because how much can it run? I think we have to really look at the squares, and I'll spend a little more time on the dollar. And yeah, so that's what comes to mind.
Yeah, because that has an effect on all these different asset classes. So
Yeah, so we'll highlight that.
that'd be great to have that.
Mhm.
So everybody, listen, we appreciate the support this year with the channel. We're glad you guys like the videos. Make sure you like, subscribe, share the links with friends. We really want to grow the channel, and you all have been great in helping us do that this year. So, hope you enjoyed this midweek show, and we'll talk to you in a couple days. Good job, Barry.
Thanks, Ben. Good job. We'll talk to you guys Friday. See you
See you
Friday.
Friday.
And
Yep.
bye-bye.
Bye.